Hi guys, I'm going to do a quick video on gold. It's been a while since we last looked at the precious metal prices, so I thought today might be a good opportunity to do that because the markets are a little bit quiet. So I'm going to start off by looking at the weekly chart of gold. Okay, so the trend has been bullish on the weekly time frame. Obviously, we broke above the previous record high that was set in 2011. This was the level, and what I'm going to do is just make a note of that. And this is a key level, obviously. So I'm gonna sync this to all my charts because it's really important. And now we should have the same level on all time frames. And we have indeed. Let's go back to the weekly. And another thing I want to do very quickly is mark out the highs and the lows of the previous week. So this is the low of the previous week. And then sync that to all charts, and then the same for the high of last week. Okay, so we've got the low and the high from the previous week, and the green level is the 2011 record high. So last week we formed a bearish candle. There was a hammer which looked bullish, right? Because price bounced from that key level of support after a 2 or 3 week consolidation, formed this hammer-like candle. Yet what happened is we broke above the high of it, and then as soon as we went back below, that's when the sellers got the buyers rather got in trouble, and gold went on to close lower on the week. However, it held above that key level of support, the 2011 high, and it didn't really take out the previous week's low, which was this level here at the 1902. So 1902 is now the line in the sand for me. For as long as we remain above that level, I would maintain my bullish bias on gold. So that's the invalidation level, 1902 right there. Okay. I think there's a good chance gold will come back from here, because if it were to go down, it should have gone down last week. Yes, it was a quietish week with the markets, with the lack of major economic news and so on. But you know, when it fails above a high, usually you'd see price go and take out liquidity on the other side. Yet it didn't do that. Okay. So that's why I'm thinking that the weakness that we were observing at the start of this week could potentially be a bear trap before we rip higher in the second half of the week. Obviously, as I said, if we go below this level, the low from this weekly candle, then at that point I would drop my bullish bias on this market. So if we do go below that, then the next level to watch would be the liquidity below this candle, and then the breakout area here would be around 18, 20, or slightly lower than that. It is where I would look for long opportunities again. But we'll cross that bridge if and when we get there. Because I think the weakness that we're observing at the start of this week could be a trap to get the sellers excited before the market rips higher. That's my view anyway. Could be wrong. And just to add a few things, there's a bullish trend line connecting the lows. Yes, we've broken below it. We haven't closed below that on the weekly time frame yet. That's important, right? This candle is the current week, and today's Tuesday, so we've got a few days to go until the week closes. So for as long as we remain above that on a weekly closing basis, I think that the bullish bias would remain intact. Now let's go to the daily. On the daily, for those of you who like to look indicators, I don't really look at indicators except sometimes I do look at some moving averages and the RSI. The RSI is no longer overbought. Okay, that's important because people who like to buy rising markets, they don't want to be buying at overbought levels. So that's the key point I want to make about the RSI. It's no longer overbought. Price has worked off its overbought conditions through time. In other words, through consolidation rather than a sell-off. I think that's bullish. The moving averages you see here, the red is 21. This is the 200-day moving average. Yes, we are quite some distance away from the 200, which could mean that gold may correct itself at some point and get back to the 200-day eventually. But right now we are hanging around the 21-day exponential, currently below it. So if you go back above, that would be a short-term bullish indication. But forget the moving averages. We're not talking about the moving averages in this video. So I'm just gonna hide them. We are talking purely price action here. Okay. Why have I got this level twice? Yeah, got it twice. Okay. So that was my invalidation level. I can bring it a little bit closer to here. For as long as we remain above that, I'm bullish. So what would I like to see next is, by the way, look how we formed an inside bar on gold on Monday. Obviously, Monday was a quiet day for the markets, and what have I done? Monday was a quiet day for the markets because of the Labor Day holiday in the US and Canada. We formed an inside bar candle. We've broken the low of that candle. So what I would like to see next is for price to go back above the low of yesterday's low, the low of Monday's low. The low of Monday's low comes in at 1924-ish. Okay, so if we go back above that, that would indicate to me that the sellers who sold the breakdown are now trapped. If that happens, then I think gold will go on to take out liquidity that would be resting above the inside bar high at 1941 or above that. So that's the potential bullish scenario I'm looking for. I don't know if it's going to happen. I really don't. But if and when we go above 1924, that's when I'm going to be interested in this market again to look for short-term long opportunities again. So that's the key level I'm watching now on the upside. Because we are at such an important level, I'm not really entertaining the short side at the moment. It could literally break down like a stone, drop like a stone here, but I'm not looking at that potential scenario yet because of the fact that we are testing a massive level of support here. Yes, it could mean I will miss that opportunity, so be it. But I am still interested on the long side because I think there's more juice left in this rally. So yeah, that's really it. We could add a few other things and look at price action more closely. In fact, we can do that now. So let me just sync that to my hourly charts as well. That's my daughter, by the way. she's really loud. Okay, so on the daily, I am looking at this area here. On the hourly, I'm looking at this area here. This was the last up move before the latest breakdown. So ideally, what I would like to see next is for price to go and take out this area of resistance, and in doing so, it will take us back above above Monday's low. And then any rounded retest of this region would be a automatic long for me. So that would be the trigger really for a bullish trade in gold. Until and unless that happens, it's risky to buy at these levels because the way price has been behaving in recent days, it's really difficult to be very aggressive at these levels. So I am going to wait for a bullish trigger, and on the hourly time frame, the bullish trigger for me would be a break above the most recent high. So a break above this high here would be a bullish trigger, but I think I'll probably go in before that breakout happens because of the reasons I stated in the earlier in the video. And ideally, I think what I want to see is a break above 1924.25, and I think I will start building a long position once that happens, and then I'll add it aggressively once or if we break the most recent high. Obviously, the invalidation for me then would be the current day's low, or I'll look into 5-minute or 15-minute time frames to look for alternative invalidation levels for even tighter entry. In terms of target, this black level here is really important. I think price previously failed there, so we may look to take some off at around that level if it gets there, and then leave some in there in case prices break higher and push to new highs. Okay, that's all. Right now it's still looking quite heavy gold, so it could well drop, but at least you have an idea of how I look for a potential long entry in gold. Even if this doesn't play out the way I am expecting it to, there are lessons you can learn from this, and you could apply it to your other markets that you trade and look for similar setups. Okay guys, take care, bye bye.